Community Chancery and my fellow friends. Welcome to our tax forum. Today we are here to present a very discussion on a very critical topic in the modern economy, taxation of e-commerce. This presentation is part of our coursework for Tax 67 Advanced Malaysian Taxation. I am Nur Abdul Samudin and I will be your moderator for today. I am pleased to introduce our distinguished panel of speakers who will help us navigate this taxation landscape. To my right, we have Ms. Niza Ina binti Muhammad Asmawi, the satu e-commerce entrepreneur. Next, we have Ms. Siti Ina Suhabinuddin joining us as a tax analyst. We are also honored to have Ms. Siti Najwa binti Anwar, our tax expert. And finally, we presented the authority Ms. Nurul Ali Suhana binti Ahmad Hari and Mr. from the United Revenue Board of Malaysia, IRB. Let's just start in Ms. Niza as someone running Mr. Indicator. Could you define what a e-commerce actually it is and why we are talking about taxation?
E-commerce is business activity that conduct electronically, such as online shopping platforms, digital services, and online marketplace. For example, Shopee and Lazada, also TikTok Shop. Taxation e-commerce is important to make sure everyone pays tax fairly, and it helps to prevent tax loss, also protect the government revenue.
Thank you, Ms. Niza. This is the digital economy is what? Ms. Nina, your analysis, how do you categorize the business?
Thank you, Ms. Moderator. That is a great question. To understand the tax landscape in Malaysia, we must first identify who is selling to whom. The Inland Revenue Board of Malaysia apply the principle of tax neutrality, which means online businesses are taxed the same as physical businesses. There are four main e-commerce models. First, business to business or B2B. This is when one business sell to another, such as a wholesaler supplying goods to a factory. This transaction requires proper documentation for tax purposes. A local example is Shopee. With e-invoicing starting in 2024 and 2025, B2B is important to ensure tax deduction are valid. Next, business to customer or B2C. This is when businesses sell directly to customers, such as a seller on Shopee or Lazada Mall. These businesses usually deal with SST are now also affected by e-invoicing. Third, consumer to consumer or C2C. This is happen when individuals sell to another individual, for example, the TikTok Shop or cross. Although many think this is tax-free. Regular selling for profit is considered a taxable business. Lastly, consumer to business or C2B. This is when individuals offer the product or service to companies, such as an influencer marketing, where a YouTuber or TikTokers charge a brand to review their product.
As a breakdown, Ms. Najwa, as our expert, can you explain the core concept of e-commerce taxation here and how is it co-collaboration business?
Thank you, Ms. Moderator. So, for the concept of the taxation is referring to the system by which a government imposes compulsory financial charges, which is tax on individual and business, to generate revenue for a public purpose. Taxes are used to fund public service and infrastructure such as education, healthcare, transportation, national security, and social welfare. In the context of e-commerce, taxation involves imposing taxes on online business activities, including the sale of goods and services conducted through digital platforms such as website, mobile apps, and online marketplace. Example, Shopee, Lazada, and TikTok Shop. Next, why e-commerce should be taxed? First, fairness and equity. If e-commerce business are not taxed, it creates unfair competition, as online sellers may offer lower prices simply because they avoid taxes. Second, government revenue. Taxing e-commerce ensures the government can capture revenue from digital economic activities to support national development and public spending. Third, preventing tax evasion. Without a proper taxation rules, online business, especially cross-border sellers, will avoid paying taxes by operating digitally without physical presence. And the last one is economic sustainability. As the consumer behavior shifts toward online shopping, government must adapt tax system to ensure a sustainable tax base in the digital economy. Next, I will move on to the differences between taxation of traditional business and e-commerce. There are three aspects can be seen. First, business presence for traditional have physical store or offices. For e-commerce, operates digitally, may have no physical presence. Second one, tax enforcement, where the traditional business easier to monitor, while e-commerce harder to trace online seller. The lastly, example of tax. For traditional, business have income tax, sales tax, and service tax, while e-commerce have a digital service tax, withholding tax, SST on online sales.
Knowing this concept is one thing, but what tax do you actually have to deal with as an entrepreneur? So the type of tax we have four types.
Income tax. Income tax is tax on the net profit you earn from the selling online. If you sell products or services such as Shopee, you must report your income to IRBM. To get the net profit, sales minus the expenses. Tax rate for individuals 0% until 30%, where it based on the scale rate based on the income, while company use its flat rate at 24%. Sales tax or SST. Sales tax applied to import items that bought online from the overseas. It will be charged 10% for the tax. The formula sales tax 20% tax value of the good. It usually collected by the foreign seller or platform. For example, you buy item for 100 ringgit and the tax will be charged 10%. The total amount that you need to pay is 110 ringgit. Next, service tax. It applies to online services. It can be applied at digital advertising, subscription services, platform fees, and streaming or software services. It will charge at 8% for customers that using the service. Foreign digital service providers must also charge this tax to Malaysia users. Lastly, withholding tax for the foreign platform. Withholding applies when paying foreign company for their online service, such as payment for ads. Example, YouTube, software technical services. Tax rate charge 10% for technical or services fees and 50% for your royalty. The Malaysian business deduct the tax and pay it to IRBM.
That is quite a list of obligations. Ms. Anis, representing the RMN, how do you manage and enforce all of this?
Thank you, Ms. Moderator. Today I will explain about the Inland Revenue Board of Malaysia, or IRBM, locally known as the LHDN. The IRBM act as the primary enforcer of income tax law. Now, modern economy, their role has expanded significantly because they don't just monitor traditional brick and mortar shop. They are also actively monitoring e-commerce businesses to ensure that all the online entrepreneurs declare their income correctly. Think of them as the support system as they provide the necessary guidance for the tax registration and compliance to ensure every transaction is transparent and legal. So who exactly need to be registered? If you are an individual or a company earning income from online sales right here in Malaysia, you are required to register with IRBM. The process is very straightforward. First, you register your business entity, whether that is sole proprietorship, a partnership, or a company. Once you obtain your tax file number, you must submit your annual returns. And depending on your setup, you will use Form BE for individual, Form B for business income, and Form C for companies. A crucial tip for success is always keep a meticulous record of your revenue, expenses, and also digital invoices, because a good record keeping is the best defense during an audit. Moving beyond personal income tax, let's talk about SST or sales and service tax. Let's strictly on digital services. This applies to services provided by both foreign and local providers. What counts as the digital services? It's more common that you think because it includes your streaming services like Netflix and Spotify, on advertising like Facebook and Google Ads, cloud storage like AWS, and even your software subscription or in-app gaming purchases. If it's delivered over the internet, it's likely falls under this category. Now, how is this regulated? Foreign digital service provider must register under the Malaysian SST regime if they meet the two criteria. The first one is they provide digital service to Malaysian consumers. The second one is their annual digital service revenue exceeds 500,000. And when registered, this company are legally required to collect tax from you, the consumer, and remit it to the Royal Malaysian Customs Department. And the current rate for digital services is stand at 8%. Let's look at a practical example of how this affects your monthly bill. Imagine a consumer uses two platforms, Netflix at 50 ringgit and Spotify at 30 ringgit. The 8% SST applied. The tax on Netflix is 4 ringgit and the tax on Spotify is 2 ringgit 40 cents. And in total, the service provider collect tax RM 6 ringgit 40 cents in tax, making the consumer total monthly payment is RM 86 40 cents. And as you can see, the tax is transparently added to the base subscription price. Finally, let's look at it from a business perspective. Suppose a Malaysian SME spend 2,000 ringgit a month on the Facebook ad to grow their brand, because advertising is a taxable digital service. The 8% SST apply here as well. The tax amount would be 160 ringgit, bringing the total payment is 2,160 ringgit. Whether you are a casual streamer or a growing business, understanding this digital tax law ensure you can budget accurately and stay compliant with the Malaysian law.
Thank you, Ms. Ani, for that detailed explanation. However, as we look at the current landscape, there are significant issues in e-commerce taxation. The first major issue in e-commerce taxation is unregistered online businesses. Many small-scale sellers operate without registering with the Inland Revenue Board of Malaysia (LHDN) or the Company Commission of Malaysia (SSM). Without formal registration, income is often not declared. In Malaysia, IRBM has identified such sellers through data obtained from e-commerce platforms and issued tax reminder letter, even though they were not registered as taxpayer. Secondly, there is a lack of tax awareness among online sellers. Many are unaware that income earned from platforms such as Shopee, TikTok Shop, or Facebook Marketplace is taxable. Some believe that only apply to a large business, which lead to unreporting of income either internationally or uninternationally. The third issue is failure to declare online income. Some sellers do not fully report income earned from online sales either internationally or uninternationally. IRBM has issued audit and reminder letter after detecting undeclared income through digital platform and bank transaction data, showing that this is a serious concern. Moving on to the challenge. The first challenge is difficulty in tracking income. Seller receive payment through multiple platforms and digital payment channels such as e-wallet and bank transfers, which make it harder for RIBM to monitor total income accurately. Another challenge is cross-border transaction. Foreign suppliers provide digital services such as Netflix, Spotify, Google Ads, and Airbnb without a physical presence in Malaysia. To address this, Malaysia imposed a 6% digital service tax on foreign digital service providers. Next challenge is the characterization of non-digital payment models. Great challenge in classifying income as business income, service fees, or royalties, which affect how tax is applied under Malaysia tax laws.
Given this issue is enough, what are the actual consequences for those who fail to comply?
Thank you, Ms. Moderator. Now, why should online seller care about the tax compliance? This is because in Malaysia, the consequences of not complying with tax law are very serious. First, let's look at penalty for late tax payment. If a taxpayer fail to pay their tax by the due date, a 10% will be imposed on the unpaid amount. If the tax is still unpaid after 60 days, an additional 5% penalty will be charged on the remaining balance, including the first penalty. This is shown how quickly tax debt can increase if ignored. Through my independent research, I found 3 critical tax offences that every digital entrepreneur must understand. The first offence is failure to submit a tax return. If a person does not file their tax return without a valid reason, they may be fined between 200 and 20,000 or even jailed for up to 6 months. At first, I thought missing a form was not a serious issue. Now, I understand that this can affect registration and legal operation as a future accountant. It is my responsibility to ensure a client understand that submitting a tax return is a legal requirement. The second offence is incorrect tax return under Section 113 Subsection 1. If income is underreported or left out, such as sale from TikTok Shop or Shopee, the taxpayer may be fined 1,000 to 10,000 plus additional 200% of unpaid tax. The third and the most serious offence is willful tax evasion under Section 114 Subsection 1. This applies when someone deliberately avoid paying tax. The punishment include up to 3 years of imprisonment and a 300% tax penalty. Now, I will pass to moderator.
Those penalties are definitely not good. It's natural. Apart from avoiding for our mind, why is compliance important?
Thank you, Ms. Moderator. So, for importance of tax compliance, the first one is to contribute to national economic development. Tax compliance ensures that business and individual pay the correct amount of tax on time, which provide the government with stable revenue, and with that, they actively contribute to economic growth and national development. Second one, build business credibility. Business that comply with tax regulation are seen as trustworthy and professional. Proper tax compliance improve a company's reputation among customer, supplier, and investor. The last one is avoid legal problems. Failure to comply with tax law can result in penalties, fines, audits, and legal action. By complying with tax requirement, businesses can avoid unnecessary legal risks and also financial losses.
Before we conclude, let's quickly share our personal and professional reflection on this topic. What are the benefits of it? So I was people think about the entrepreneur is not overcome, but actually I think that it's actually close to the this actually the high speed on the business progress. Okay, for me, it's a quick when we think about how the share of my every day such as on the domain and
For me, this topic is mandatory that taxes collected from the business services contribute to national development, which benefit our society as
for me, I think overall this learning experience made me more aware of my responsibility as a future taxpayer and also encouraged me to be more mindful in managing income and expenses. So from the establishment from all community, what is the benefit about managing income? For this assignment, I limited knowledge of e-commerce and trade. I learned that all businesses are closely monitored by IRBM to visual presentation. This topic improved my understanding and helped me develop stronger analytical thinking. Thank you all for sharing your reflections so far. Now, I would like us to focus on self-improvement. Could each of you share one self-improvement you can through this assignment?
Actually, for the preparation for this topic, it helped me become more confident when explaining the technical information. I learned how to organize my ideas clearly and communicate to them in a better way. For me, through learning about e-commerce strategy, I improved my ability to think critically and analyze real-world financial situation. This made that concept feel more practical and relevant.
For me, this is actually learning experience encouraged me to be more sustained, especially in economy and financial planning. This has been important for future business or career.
Okay, for me, I think it's something that helped me become aware of my financial responsibility, especially in the economy. And I now understand that earning money online also requires honesty and proper tax compliance. So from the explanation and experience, what is the relevant economics of this assignment? I like the importance of continuous learning to frequent changes in tax regulation. It also prepared me to improve my tax knowledge, record-keeping discipline, and communication skills. This improvement will enable me to responsibly advance and manage my own business effectively in the digital economy. Thank you all. It has been a valuable lesson in responsibility and growth for all of us.
To conclude our forum today, it is clear that e-commerce activity in Malaysia are closely monitored by tax authority, making taxation an important aspect of online business operation. E-commerce taxation play a vital role in Malaysian fiscal framework by ensuring fair contribution from both local and international digital businesses. Proper tax planning and compliance with tax regulation, including income tax, SST, and digital service tax, help reduce the risk of penalty and legal enforcement by promoting transparency and accountability in the digital economy. The more effective tax administration support national economic development by generating revenue for public services and encouraging sustainable, credible business practice in Malaysia's rapidly growing e-commerce sector.
To our panel and thank you everyone for listening. We hope this discussion has provided you useful insight and inspiration.